All right, today we are going to unlock a complete trading blueprint designed specifically for the NASDAQ and the S&P 500. Forget guesswork. We're diving straight into a step-by-step strategy that's built on real statistical edges in the market. This is the big question every trader has to ask themselves. If your results feel totally random, driven by hope one day and just pure frustration the next, it's probably because you're missing a clear, repeatable plan for making your decisions. But that's exactly what we're going to fix today. We're throwing that guesswork out the window and diving into a structured, rules-based approach that gives you a solid plan for every single trade you consider. And this really gets to the heart of it. The goal is to move beyond luck. As the source material puts it, this strategy will not depend on luck, gambling, or unrealistic 20% daily targets. It's all about building a professional, disciplined approach to the market.
Okay, so what's the big idea here? What's the engine that makes this whole thing tick? The entire system is built on a really powerful yet pretty simple central concept. Let's break down how all the pieces fit together.
It's called the 3-timeframe continuation system. And the real magic here is how it layers 3 different views of the market. First, you've got the 15-minute chart setting the overall trend. Are we generally heading up or down? Then the 5-minute chart confirms the momentum. Is there actual power behind this move right now? And finally, the 1-minute chart is what gives you that precise entry signal. The key is each step has to confirm the one before it. And why do all this layering? Well, the whole point is to filter out a massive amount of market noise. We're talking about getting rid of up to 80% of those false signals and fakeouts that trap so many traders. By making sure all 3 timeframes agree, you stop chasing random moves and start waiting for the really high probability setups. All right, let's really dig into how this 3-layer system works as a filter, separating those quality signals from all that chaotic market noise. We're going to break down each layer one by one. So the first and most important filter is the trend. We're looking at the 15-minute chart and using 2 exponential moving averages, or EMAs. It's simple. If the faster line is above the slower one, the trend is up, and you're only looking for buys. If it's below, the trend is down, and you're only thinking about sells. And if they're all tangled up and going sideways, you do nothing. You've just successfully avoided a choppy, unpredictable market. Okay, so let's say the 15-minute chart is telling you the trend is up. Great. But is the move happening now? That's where you check your second filter, momentum. You switch to the 5-minute chart and look at the RSI. You only move forward if it's showing strength, say above 55 for a buy. This makes sure you're not just in a trend, but a trend that has some real gas in the tank right this minute. And finally, with the big picture trend and the immediate momentum on your side, you zoom all the way into the 1-minute chart for your entry trigger. This is your final green light. You're waiting for a very specific crossover of 2 fast EMAs to tell you, okay, the move is happening right now, go. So you can really think of this like a funnel, right? You start wide with a big picture trend, then you narrow it down with momentum, and finally, you pinpoint your execution with that precise trigger. Each step has to get a yes before you can even think about the next one. No exceptions. Okay, the signal is there. The filters are all green. But a signal is just a blinking light. What do you actually do next? Let's get into the nitty-gritty, the exact rules for getting in, getting out, and managing the trade. The entry rule is designed to be almost robotic, which is a good thing. Once your first 2 filters have lined up, you just sit and wait for the EMA 8 to cross over the EMA 21 on that 1-minute chart. This takes all the hesitation and all the guesswork out of your entry decision. Now, this is so important. Your exit plan is locked in before you even click the buy or sell button. The rules are totally fixed. For the NASDAQ, it's a 15-point stop loss and a 30-point take profit. For the S&P 500, it's a bit tighter, a 5-point stop and a 10-point target. This mechanical approach takes all the emotion out of your exits. And that brings us to the mathematical engine of this whole system, a fixed 1-to-2 risk-to-reward ratio. You are always risking $1 to make 2. This is a massive edge. And why is that so huge? Because it means you don't even have to be right all the time. You could have a win rate under 50% and still be profitable over the long run. That's a huge psychological relief. Look, having rules for trades is only half the battle. A truly professional strategy also tells you how to manage your 2 most vital resources, your capital and your time. Okay, this might be the single most important rule for staying in this business long term.
You never ever risk more than 1 or 2% of your entire account on any single trade. This makes sure that a string of losses, and trust me, they will happen to every single trader, won't knock you out of the game. It's all about survival. And listen, this is not a sit at your desk for 8 hours kind of strategy. It focuses on very specific, high opportunity windows. The key times are right at the US market open and then a later session for continuation moves. Why? That's when the volume and volatility are at their best, giving you the clean moves the strategy thrives on. After 9:30 p.m. UK time, the advice is simple. The party's over, volume dries up, so just stay out. All right, let's talk defense. Because in trading, playing good defense is often way more important than playing good offense. What you don't lose matters. And that means knowing when to sit on your hands and how to protect a position when you're in one.
This one's a bright red line. You just don't trade during major news events, period. We're talking about inflation reports, interest rate decisions, jobs data, all that stuff. During those moments, technical analysis pretty much goes out the window, volatility goes nuts, and you're basically just gambling. This system isn't for gambling. The system also has a really smart defensive move called true hedging. So let's say you're in a buy trade, but the 5-minute chart shows things are pulling back a little bit. Instead of panicking and closing your trade, you can open a tiny, quarter-sized sell position. The point isn't to reverse your trade, it's to create a small buffer to reduce your risk during that dip. As soon as the main trend kicks back in, you close the hedge and let your original trade do its thing.
Okay, we've gone through all the pieces. The trend, the momentum, the entry, the risk, the defense. Now let's put it all together into your daily game plan. This is the final checklist that turns all this theory into a consistent, repeatable routine. And here it is. This checklist is the entire system in one, single, actionable plan. It's your daily blueprint. It tells you exactly what to do before you start, like checking the news and finding the trend. It guides you during the session with clear rules, and it gives you a framework for after you're done focusing on review. This is how you build real discipline, by following a consistent process every single day.
And that really brings us to the final and most important question. The system provides a clear, logical blueprint. All the rules are laid out right here. But the real challenge for any trader isn't just finding a good system. It's having the discipline to actually follow it perfectly every single day, especially on those days when the market is testing your patience.